All right. So welcome to Game Plan Sunday. Today is August 23rd. We're at the end of the month here, and the markets continue to melt up higher. We had a couple of different things, things that took place this week with the markets, capping off those new highs. And definitely, it's the shortest. You're talking about the shortest bear market ever in history, as far as the stock market goes. But as far as the economy goes, economy is still in the drain. But you guys got to understand that this is all a confidence game. Everything that's keeping the markets going is just pure confidence. The fundamentals are not there. So, but we got to play what the market gives us. So understand that that's what's taking place. We did have some economic data that came out that was, let's see, we had the housing data that came out this past week, which is actually pretty optimistic. This is right here on the website. And let me switch over here real quick so I can catch that. But yeah, you guys know we're catching it all. We're putting it on the site. So we're just going to review straight from the website. Of course, it's all in here. Bingo. So yeah, housing starts jumped 23% from June to annual pace of almost 1.5 million, a reflection of rock bottom interest rates. So it's just telling you that this is all because of the Fed's, manipulation in the interest rates, suppressing those interest rates, keeping them down low. That is all designed to influence people to go out and buy homes with the mortgages and everything being pretty low. It's talking about the construction activities going up. And so this is actually looking optimistic. If you see, the construction is actually going up. So that's a good thing. But, delinquencies are rising. And so people are not actually seeing that those delinquencies are getting, out of hand. They're actually way out of hand. So, it's still a divergence at the same time, because you say, okay, well, most people are going to try to jump in and capture those low interest rates. But as Mark was saying on Facebook side, that the housing prices are at their highs. So, yeah, you got low interest rates, but you have, valuations of these homes at all-time highs. And so it's really it's still not a good thing if deflation hits, right? Because then you'll be holding on to a deflation. You'd be holding on to a depreciating asset. So that's the thing that we have to watch for here in the future. And we're already starting to see it happening now with, a lot of cities, big cities. People are moving out of the big cities like never before. So that's happening in real time. And so that's causing the prices of those assets to deflate. See, especially in New York, I think it was an article that came out like last week or 2 weeks ago, was just talking about how, they're having to lower their rates, their rent rates, that they're actually trying to rent the tenants out because they need to keep tenants in there. The real estate guy can't make the money, can't keep no tenants in there. But, you got this exodus of people leaving these big cities and going into the suburbs. And so with the housing market, when you start looking into the data on that, it's not just like this one black and white number. The housing market is basically separated into different markets. And so you have to take a look at the Northeast, the Southeast, the Midwest, the West Coast. Like every housing market, they're basically experiencing different things. And so, you have to basically, if you're out in the markets and you're trying to, figure out, hey, it's a good time for me to buy this, that, and the third, then you want to go look that up into your particular region where you are. And so you get a better, more granular level looking at that data, basically. So it's more specific to you. But either way, this is still look good for the market's sake because it's a confidence thing that people are buying. Now, the thing is that you got, over 20 million people that's out of work. So, you still have super high unemployment. Who can afford, these super high rates, again, the expectation for myself and other economists out there is that those prices are going to have to come down eventually. So that's the trick that you have to worry about with that. But that's what happened this week. And so the markets, was definitely feeling optimistic about that. Then we had the Feds came out. Let me actually just minimize that a little bit. All right. So then we had the Feds that came out with their statement, and we took a screenshot of this. I just highlight like the pretty much important parts of the statement. So this is the staff economic outlook. So this is from the FOMC minutes that was released. And so it says the economic activity still appeared to have declined at a historically rapid rate in the second quarter. So they're describing what events took place in the second quarter. And again, I'm just looking at you're not going to read the whole thing, but just the highlights that I posted here. And I thought this was interesting in this line here. It says that the staff's baseline assumptions, right? So they're forecasting. Their baseline assumptions were at that the current restrictions on social interactions and business operations, along with voluntary social distancing by individuals, would ease gradually through next year. And that's a big assumption because, voluntary is the big word. People have to voluntarily, do this social distancing thing unless they, force people to do it, right? And so we've seen a lot of that forcing movement in there, but this is still creating a lot of social tensions. And so I thought that was interesting. So I highlighted that as well. But on the bottom paragraph here, they were saying that, let's go here. The staff continued to observe that the uncertainty related to the economic effects of the pandemic was extremely elevated, and that the unusual nature of the pandemic-related shock made assessments about how the economy might evolve in the future more challenging than usual, right? So they're basically saying it's going to be more challenging than what they normally would expect. In light of the significant uncertainty and downside risk associated with the course of the pandemic and how long it would take the economy to recover, the staff still judged that a more pessimistic projection was no less plausible than the baseline forecast. In this alternative scenario, an acceleration of the coronavirus outbreak with another round of strict limitations on social interactions and business operations was assumed to begin later this year, leading to a decrease in real GDP, a jump in the unemployment rate, and renewed downward pressure on inflation next year. Compared with the baseline, the disruption to economic activity was more severe and protracted in this scenario, with real GDP and inflation lower and the unemployment rate higher by the end of the median term projections. So they're just telling you, what their projections were. Things did not go according to they was expecting, I guess, things to take place a little later in the year. And so, they try to be optimistic about it. But again, you see, they're going to be more optimistic than anybody else because they don't want to scare the public. So you have to take a look at it that this is, they say the baseline case. This is all, optimistic case, basically. So we got that report that came out this week. Here we go with the unemployment claims that came out this week as well. 1.1, let's see, an increase of 135,000 from the previous week's revised level. So, when they release the news, for the weeks, they always come back and revise them. And the first numbers that print are always wrong. Those numbers they make good headlines for the stock market to move, but I mean, they always get revised, right? And so the numbers that they were reporting last week, when we were seeing this little blip in here, we were saying that, hey, with this little blip coming down, that was a good sign, right? It was like, oh, that's a good sign, that the claims are coming down, right? But then you get that, that break back to the upside. So now that risk is back on, right? So the risk is coming down, when it's coming down, you're saying, oh, that's looking good for the economy. But then when they come back and say, hey, those numbers are actually wrong. Those numbers are actually higher than what we were saying they were. So, this past week numbers were actually higher than the revised numbers, right? So not the previous ones, but higher than the revised ones, which are higher than the previous ones, basically. So anyway, revised up 8,000. And so, again, this wasn't a good look for the economy as well. Seeing that many people out of work. It's still lots of people that's out of work, will continue to be out of work. I think I even saw like Pizza Hut supposed to be laying off like 300 people or something like that. So, I mean, you're going to continue to see this. And, basically the only people that's really benefiting in what we're seeing right now are the big tech stocks. So we'll take a look at that. In fact, I think the calendar is pretty light this week. We had some economic data, but nothing really significant. Let's see. We got the unemployment claims coming out, and we got the GDP estimates, personal income and outlays. And okay, so then we actually got the Chicago PMI numbers that's going to come out, I believe, Thursday or Friday. So But yeah, so anyway, if you want to see what's coming up, down the pipeline, if you're on the website, make sure that you subscribe if you haven't. But you can go straight over here to the events tab. And again, you'll see this tab right here if you're in the news feed. So that's where we are right here, the news feed. But you just check out the events calendar so you can check and see what's popping. And there are links associated with certain things. So if you want to get your hands on that data when it's released, you can just go straight in here and you can go straight to the site, click on the links, and so that you can get, the full review and you can actually, read that and, develop your own conclusion from what you're actually reading, So, yeah, this is what we got right up in here. So I got it pretty light. But with that being said, let's actually just switch on over to the charts here. So let's go to the S&P 500. We'll go over the index. All right, so just taking a look at the major indices here. We got these record highs on the S&P 500 right now in real time as we speak right now. Finally broke that the previous resistance that was back here. Oh, we can't do red on that blue. We got to put that yellow on. Let me get that right. All right. So there we go. All right. So we finally broke this. This is what we're looking at right here. This move right up into this range here. The markets are extended. OK, we can see that we're in super overbought territory. But we have seen, in the past that, these levels can stay elevated. We don't know the timing of how long it's going to stay elevated, but you definitely want to take caution when you get into these zones here. But overall, S&P 500 moving up. So breaking records on that. The NASDAQ. The NASDAQ is where all the sauce is at, all right? So the NASDAQ is where all the sauce is at. These are the tech companies. You're basically looking at a whole, 2K.com bubble all over again, 2.0, if you will. But I believe that the NASDAQ is going to continue to rise. We've got the trend that's still moving in there. This has been the best performer by a long shot, from its previous highs before the crash. Look how far it's extended. So, you definitely are a winner if you've been exposed into tech stocks. So tech is where the sauce is at, and tech is where the sauce is going to continue to be. I mean, and a lot of that comes from, the government shutting down a lot of these other, companies and industries, whereas tech did not have to be suppressed and by force. Everybody can do everything online. In fact, the government wants everything to be digital. They want everything to be online, and I'm going to say this because just understand government's always about control. People always ask, why would they do this? Stop asking stupid questions. It's always about money, power, control, always have been, always will be. And so in the natural world, it's only so much that they can control. When I say natural world, meaning your real life without electronics. In the electronic world, it can be controlled. It can be tracked. You can be traced. So that's why, when they came out with these smartphones, we're seeing technology, changing faster than ever. So that's what I was telling people when I got my data science certs and data analyst certs. The things that I was learning was just crazy. I even did artificial intelligence program writing, and it just blew my mind. I was like, oh, this is just crazy. I actually had to put it down because it got scary, right? But everything is being tracked, right? So the smartphones and stuff. And it's funny because my wife, she was telling me we were actually talking about this trip that we plan on doing. And this is the night before. We're just talking about it, not searching, not looking at anything. And then she comes in the morning and she was showing me like her phone was advertising the things that we need for the trip. And I was like, yeah, see, that's a good point right there. And I posted this on Facebook. It's crazy time in life where you have to have a privacy room in your home. When you want to have privacy in your home, you need to have a room set up where there's no electronics and no cell phones are allowed to enter. So therefore, you can actually really have some privacy in your household. And this is a funny thing I was actually talking about with Microsoft a couple of years ago, when Microsoft with their gaming, they had dropped this thing on the Xbox console called the Kinect. And I was like, well, they were definitely well ahead of their time, but it had got met with a lot of resistance. And it ultimately cost Microsoft in its race against PlayStation, Sony PlayStation, because people were saying that this thing is always going to be on. It's going to be watching and listening. And so the gamers basically fought back at the Xbox Connect. And, you know, me, I like using technology stuff. So I'm like, yeah, I'm okay with the Connect. It's not like I'm cooking up bricks or something in the house. So if they watch it, I mean, whatever. I'm not even thinking about it. I just want to use the technology. And that's the way most of us are. We want to use the technology without understanding the privacy issues that you're actually having. And those privacy things can only be facilitated through, you know, technology, right? And so the government is in full support of technology. You know, these technology stocks being expanded, and they will be funding a lot of the operations, because that's what they want, to be able to have that level of control. So I just wanted to bring that out because, I mean, that's where we are. So, and I just thought that was an interesting observation that, you know, even when you're just talking, next thing you know, they're advertising the things that you're talking about. And so they're always listening. Big Brother's always listening. So, and, you know, you got the dope boys in the streets be mad at everybody talking about, why you snitching on me? Well, I mean, you snitching on yourself. I mean, you got this thing in your pocket. Nobody got to snitch on you. So anyway, tech stocks has been, you know, popping. They're going to continue to pop, and that's the reason why, right? So, so anyway, exposure there. Let's take a look at the Russell. And the Russell is actually looking like it's starting to roll over. The Russell never cleared its highs from previous time. It's been a lagger, basically. So this is the previous highs. Then it came up to this Fibonacci level here, this 127 extension from this swing high, from this swing low. And we saw that it's got rejected, and it's starting to trade a little sideways. And so the question is, you know, is this going to actually roll over, right? We got the trend that's starting to come down. I mean, the stochastics is all the way down and starting to, you know, turn up a little bit here on the faster side of stochastics. And we're seeing prices sitting right up here on the 20, which is a support. So, you know, it's going to be interesting to see how the Russell will behave. But, you know, a lot of those companies, they haven't seen the breadth of, you know, the expansion of the markets, you know, back this time around, like we've seen in the tech stocks. So they have definitely much weaker. The Dow Jones has actually came up as well. Actually, oh, wrong symbol. All right, so the Dow as well, you know, starting to come up. Let me actually take this from this swing high to this low. Yeah, pretty much the same, pretty similar to what we saw in the Russell, of course. So, yeah, but I think that we have some more opportunity here, right? You know, we got a little buy trigger here, and I think we can probably move up a little, you know, higher to around the 29,000 spot. Okay. All right. Taking a look at the, let me take a look at the oil markets real quick. All right, so taking a look at the oil markets, the oil has been squeezing up into the 200 moving average, which we got this yellow line right here. It's been squeezing right up in this zone here. We got higher lows, so the lows have been squeezing right up into this spot here, and it's up against major resistance right here. The question is, will oil be able to breach this zone, or which breaching means that it's going to go higher, or will oil get rejected here and tumble? So it makes for an interesting case because we do have a squeeze here. I mean, we had a squeeze before and it never fired off, right? But we're back into that squeeze zone, but I do have a sell trigger up here, which makes this whole situation in oil a little interesting. Now, for you guys that know my work here, we talk about, you know, oil as being a proxy for inflation. So if inflation is going higher, if oil is going higher, then that's a good way for you to track inflation. So if this goes higher, then that means that people are spending more money on the goods that you get. Even if Amazon is moving the markets and people are shopping online, those things still have to be delivered to you. And so with those companies, you know, they're shipping, well, they got to pay for the fuel. And when they have to pay higher costs, they normally pass that cost on to the consumer goods. And so you end up paying more, which is inflation, right? Well, it's inflationary, I should say. The inflation itself is just, you know, the Fed's creating more money put into the system. But yeah, so but we'll, you know, witness the prices go up. So I think oil is in an interesting spot. And, you know, if this goes up, I mean, this is not going to be good for stocks, actually. I don't think this will be good for stocks. This will actually be good for gold because gold is protection from inflation. So if we get this pop here, then you know, hey, we got to get back into gold, right? For another leg up. If you haven't, if you are not in, or if you already left out. So that's an interesting situation. If we dial more into let's see the sectors here, I got oil and gas. We can see here, get a little more granular with the details. And we got, you know, this rejection at the 200, and then we got this rejection down here at the 100. And we see the price is starting to tumble here, right? The stochastics came down pretty low, and the trend is going down as well. So I'd be more, to me, and I would be more inclined into shorting on this one here. Now, again, this could go either way, but if it does go to the north side, you know, this would be, you know, this 200 moving average right here would be the, that'll be the ceiling there. But because the sector itself is turning over here. And I think that's actually best case scenario for the economy if this, for this to actually go down. And so you could take a look at, you know, individual stocks like Hess was already starting to tumble, as you can see, straight up getting rejected at that 200, you know, bouncing downward already. So you can, you know, take a look at those for some short exposure. EOG, same thing here as well. So we see that 100 moving average resistance zone. And so we see that oil, you know, we see these oil stocks are breaking. We had a squeeze in here and it's buying short, right? So, you know, that could be some short exposure. As far as, excuse me there. Let's take a look at gold and silver real quick, because I know y'all going to ask. All right. So here we are with gold, and gold is at an interesting spot, and it looks like it's starting to try to form some type of double bottom situation, which would actually be pretty dope. I don't really know if we'll get there or not, but this 50 moving average is a key level of resistance support here. Excuse me. So if gold was to come down, you know, some more at this point, I think that'd be a good buy zone here. We've seen it at hell here at this time, and then more than likely it'll hold here if it comes back down some. But, you know, we had Warren Buffett that jumped into the game. And so we did get a nice rally, you know, once that news popped. But then you're starting to see it come down a little bit. The wells are in. So, I mean, we already know the buyers are in here. The chart is still intact. The chart looks great, actually. So I'll say any downward pressure at this point would be ideal for a buy zone. And the zones that you want to be buying at is right here at the 50. You know, you want to see how it behaves if it comes down to the 50. I don't know if we're going to get it to come down, but if it does, then that is a better buy point than you buying $2,000 an ounce gold. If you can get it at, you know, 18, you know, what's 1890, then that's more ideal. And then, you know, you'll ride it back up when it's ready to come back up to the next zone. Remember, long-term Bank of America's target, we have $3,000 there. I think Morgan Stanley has like a $3,400 target or something like that. So, you know, you got banks that's already super optimistic on this stuff. And so, you know, we can potentially see a double bottom type setup here in gold. And then silver will track that, you know, pretty much similar. Except for silver may be a little more volatile. All right, so get a little more volatility over in silver, where silver could come down a little further than what gold will come down to. So not too sure, but we had to come down like here, came up that way. And if it comes down again, this would be a first zone to take a look at. But the 50 will be a strong support zone here if it comes down that way. And again, silver moves a little more volatile. Again, the chart is still intact, still looks, you know, beautiful. Right now, you're getting a great buy opportunity right now if this thing, you know, comes down any further. It'll be the re-up zone for the next rally up. All right, now let's take a look here. I'll take a look at now. The news of the week was about Apple and Tesla, of course. Everybody's talking about Apple and Tesla. The split is coming up. Lots of speculation jumping into Apple. The stock is pretty much parabolic. And it's basically because they're having this 4-1 split, which is next week on the 31st, right? So next week, or this week coming up, I should say, there's going to be a stock split. A lot of people don't quite understand this stock split situation. They're trying to hurry up and get in. It really actually doesn't make a difference if you want to be an owner of Apple. If you get in before the split or get in after the split, it's just a way for Apple to raise capital to attract, more investors at a lower price. So basically, one stock is going to get split into 4. So if you own it before, the price of the stock is going to go down, but you're going to own more shares. So it actually doesn't even make any difference. But for some odd reason, Wall Street is pretty excited about it. And so, we got this move up here. And if you take a look from this swing to this swing high to this swing low, this was the extension here. OK, that was the highest 1618 extension. But when you get these melt ups, right, right. So we had that little trigger that came right here at the earnings. Now it's moving up towards this extension of the extension. So it's a 2618 extension that I have over here, which is a little above 500, which I think the Apple could tag that. But I think it's a pure speculative play. So again, it's a little dangerous. If you're not, day trading it, I wouldn't count on it because the price of Apple is really high. Apple's having a lot of situations with, I think it's the what's the video game called? My kids play it all the time. Fortnite, Epic Games. Basically about their practices with selling, these gaming apps in the store. So having some heat with that. That's coming down the pipeline in real time right now. Apple is not able to even sell, their product, their iPhones. They're not expanding in that. But what they are doing is they're actually packaging services. And so the management, they have a good moat. Management doing a great job with trying to, keep the business going. But, China's big issue is that it can't break into the Chinese market. China's got the biggest population market, and they can't get into that market. So they're pretty much, tapped out when that comes to that. But they're doing is bundling services to get those sales. And so, still a good stock. But at this price, I think that is overvalued. And I think it's all speculation because of the split here. So I just want to cover that because I know everybody's talking about it. So we also have the split coming to Tesla. So you also got the split that's coming in Tesla. And Tesla's actually blown through, the 2618, which is the 2000 target. And that was this swing high to this swing low. But we did another swing high to this swing low. We had this extension right here. And we're seeing prices, they're being met with resistance up here. Now, if Tesla blows through this, I don't know where we go on that, but it's definitely not worth this by any stretch of the imagination. Tesla's definitely not, when you see more Teslas on the road than any other car, then yeah, but this is all speculation. It could be confidence in Elon Musk's ability to deliver in the future. As the market is a future forecasting mechanism, Elon has his hands in a lot of government contract taxpayer dollars that's funding a lot of his operations like SpaceX. He has the Hyperloop transportation, he's doing a lot. And then with Tesla, I think another part to consider as well is speculation on a Biden victory. With the Democrats, they have a huge push for clean energy and climate change as their initiative. The Republicans don't even actually really even believe in that. Either way, Elon Musk will be, beneficiary of the Democrats if the Democrats actually take Congress and the presidency, because they're really going to make a strong push. And he has, solar power stuff. He has Tesla. He's doing a lot of clean energy stuff. So a lot of this, again, could be speculation into the presidential election as well. But it's still a bubble nonetheless. But anyhow, they have their stock split coming up as well. They're doing a 5-1 split. So if you own one stock at the time of the split, it's going to break down into 5 pieces for you. The price is going to come down. So when the price comes down, a lot of people is actually going to be wanting to get in on it. So either way, it doesn't make a difference if you get in before or get in afterwards if you're looking to be an owner of, Tesla. So yeah, I just want to cover that real quick. And let's actually just take a look at a couple stocks real quick, and then I'll take a look at some from you guys, and then we'll call it a night. All right, so covered a couple of short situations looking at. Let's take a look at some longs here. Now, I'm still optimistic on tech. So this is the XLK. So XLK is going to be a whole lot smoother, lower risk than actually playing individual stocks. If you're looking at getting some exposure into these this tech boom here, then this would be the steady flow here. This would be the steady flow. When it goes down, it doesn't get wrecked too hard. When it goes up, it doesn't go up too high, but it should be a steady flow as long as the tech stocks will continue to boom. This would be a good place to park some exposure there. If you want to get into, I think these computer chips are actually doing good. You have the situation in like AMD. Okay, so AMD, if we take a look at from this swing here, got a target up here. Okay, at like the $90 mark, and then at the extension around the $95 mark. So bullish on that. It is extended, of course, because the markets are extended, but I think this is the best opportunity with these extended markets right now. So AMD, I do like that to the long side. These computer chip stocks are actually looking pretty good. In fact, let's take a look at Oracle. Let's take a look at Oracle. Oracle stock, from my understanding, they are in the bidding for TikTok with Microsoft. I don't know how that's going to go, but they are actually in the bidding to try to get TikTok from Microsoft. But I thought this was a little interesting chart here. We got the trend that's moving up. We do have a squeeze on this thing. And we got, buy trigger up here. Now, we can clearly see that it struggled at the 618, resistance zone. So it'll be interesting to see if this thing can come back up against the 618. And if it does, I think that squeeze will, push it through. So stocks like, AMD, Oracle, these semiconductor stocks are actually looking pretty good. X-Links, this play right here would be a bounce play. Excuse me. So what I'm looking at on this situation here is that, again, the whole sector itself is booming. And I just think that we're actually at a great buy opportunity zone. It's off of its high and it's bouncing right here off of the 50. And so I want to see this thing to support, if the 50 holds at support right here, right? You'll start to see price chopping and then it, come up. So it's actually overbought. We have some overbought signals here that says to get back in on the stochastics as well. Momentum, it's excuse me, I said overbought. I mean, oversold. So oversold, excuse me. So oversold, and then the momentum shifting all the way down. And so normally when you get a collapse, you get a sharp reversal. So the key for this situation, I want to see this hold the 50. Now, if it breaches the 50, cancel it out. But if it holds the 50, then I'm in it for the long. Okay. Also, let's see what else we were looking at. I think Alibaba might be in a. Let's see. Alibaba is some exposure out of the American markets into the Chinese markets, which again, we have like a flag in here, play on this situation here. We do have this resistance up above, but I'd like to see this thing clear this resistance up here at the top. So I'm bullish on this one here as well. They actually, had a smash out earnings as well. So, I'm pretty optimistic on this one here. And normally what impacts Alibaba is normally, beef with Trump right now. So that's pretty much like the risk. But overall, I mean, this company's stock should probably be as high as Amazon stock is right now, and it's not. And so I think that that's still a good opportunity. All right. So with that being said, I'm kind of already at time. Well, actually already past time. I'll take a look at a couple stocks from you guys and we'll bring it to a close. What y'all got on the radar for me? What do y'all have on the radar for me? All right, and while y'all are actually looking that up, make sure you check out the website, WashingJackboyz.com. Once you actually get online, you just hit the dashboard. You have your dashboard in there. Make sure you upload pictures and information the same way you do on Facebook. And I do not spy on anybody. I actually can't even see all that information that Facebook can see. But just know that you get access to any data that you put on our website if you just request it from our site, and it gets sent straight to you. A lot of that stuff, again, Facebook and they're selling all your data. But take a look here on the website itself. It's pretty cool. And I definitely look forward to some feedback from you guys. The only way I can continue to make this thing pop and make it better. We've made some significant strides in this market here with our new website. So it's actually pretty awesome. And make sure that you get the classes. If you have no training, if you want to learn the Wall Street Jackboyz way, then you can get the classes. Like I'm in class too. You feel me? But we have a lot more that's going to be coming. I'm actually working, day in and day out on this stuff. So as you can see, I'm a little exhausted. That's because I've been working, busting my ass trying to get this stuff together. But yeah, so anyhow, make sure y'all give me some feedback on that. I have lots of other amenities over here on the side panel, as you can see. So. All right, cool. What do we have here? Ron with the PSA. All right, so we're getting a breakout above its 200 moving average. I'm gonna just actually take a swing from this high to this low. And it's actually clearing that resistance zone, which is actually pretty good, right? We see this is the breakout. So we're actually getting into a breakout here. I was interested that it's going into a squeeze while I was breaking out. So that's interesting. But I think that we can actually see this come up to the 786. So PSA, I think it's looking pretty good, Ron. Dollar Tree, I believe they have their earnings this week in Dollar Tree. So let's see. Yeah, Dollar Tree is having their earnings this week. And so this would be like an earnings play. Overall, the stock itself is bullish. It's going to be dependent if you're planning on playing this into earnings or you planning on actually holding it after earnings, right? So I think that it's highly probable that we can come up to this. Actually, hold on. It's been a while since I charted this one. Let's see. Let's take this swing to this here. Let's see what we got. All right. Yeah, so I'm going to just keep that on deck. It's highly probable that we'll get, at least a 5-point move to about 105. Okay. And then you get closer to 110 if this thing pop off. So it's not like a standout setup, but it is a bullish setup. And so the Dollar Tree is looking pretty optimistic into earnings. So we'll see. What else? Anybody else got anything else you want to look at? Let me show you guys another one real quick. 5. Okay, this is another interesting situation that I was looking at. And this play here would depend off of the support. The 200, you see the yellow line, 200 is a support zone. The stock has been able to hold that support zone 1, 2, 3 times. It's there again at that support zone. And normally when I get this bright red candlestick, this is a reversal candlestick that shows price reverses after we get those bright red ones, as you can see in the back. So we got a bright red here. And so what I'm looking for is to see the price start to, to reverse on this one, which it looks like it is. And I would like to actually play this one up into the 618. Okay. We got a buy trigger that's down here. Stochastics is reversing. And then we got another buy trigger here. We see the momentum is, reverse shifting. So I got a couple of things that's working out on this one here, but this will be another bounce, off the support play here. And so those are the ones that I'm looking at going to this week. All right. So other than that, looks like you guys don't have any other questions. But yeah, definitely hit us up on the website. If you're new to the website, if you need support, you can actually just do instant message or direct message in the inbox. You get some support. You have questions about the website itself, what's included, or, any of those type of questions, you can actually just, message and we'll, take care of you. We have the chat room as well. So make sure you join the chat room. This is the new, see, I didn't like that. You see that? Looking like the black Steve Jobs over here. But yeah, I know y'all used to like the old one, but I'm working over here. So this is what I've been working on over here. So I got you guys. Make sure y'all give us some more testimonies so we can actually post these things. We still got Mark's old one. Mark has given us several shout outs and testimonies. So I appreciate that. But yeah, so definitely, if you haven't done that yet, make sure you get in there and help us out with that. So, all right, with that being said, you guys have a good weekend and we'll catch up in the markets this week. Peace.